Good evening, guys. So in this sessions we can discuss with second questions from mergers and acquisitions, which is similar to your previous question. Okay. Now, so here no need of checking with your balance sheet. Directly we can go with our adjustments. On 1st April 2015, P took over Q Limited. So same. Okay. In an amalgamation in the nature of merger. So when in case of merger, you need to take all the assets and liabilities. Okay, you should not ignore any assets and liabilities. You need to take at not agreed value, at book value. Okay. Now, so they are giving the purchase consideration, discharge of purchase consideration would allot 3 fully paid in equity shares of rupees 10 each at par for every 2 shares. That means they are issuing 3 shares for every 2 shares. Now we need to identify how many shares here they are issuing. Okay. It was agreed that 12% debentures in Q Limited would be converted. So which is similar to the previous one. Same extra entry need to pass in the opening entries of the same amount of denomination. Expenses of amalgamation amounting to rupees 1 lakh were borne by P Limited. So your purchase company is giving that what is that amalgamation expenses. Okay, so no need of taking under realization account as it is in the case of merger, but in the case of purchase you need to take. Next, all bills receivable held by the Q Limited were P Limited acceptance. So here the bills receivable which is there in your Q Limited, so you can check in this question bills receivable 80, it has been set off against the bills payable of P Limited. So you can check the bills payable of P Limited is 120. So they are setting against the bills payable. So the thing is, while recording you need to record bills payable 120 minus 80. Next, you are required to close the books of Q Limited. So when they are asking us to close the books of accounts, you need to follow step number 1, step number 2, step number 3 and pass the journal entries in the books of P Limited. That means step number 4. So here you need to prepare all the 4 steps. When they are asking us to close the books of accounts, your wish, either you can pass journal entries or ledger accounts. So in these questions they have passed ledger accounts, it will be better, it will save your time also. Now, so as you know, all the reserves you need to take in the case of merger. So before that we are calculating purchase consideration as it is net payment method. Step number 1 and step number 2 will be same. Okay. Now what they are telling? They are telling that for every 2 shares they are issuing 3 shares. So you can check with this equation. Before that we need to identify the number of shares. How to identify? The total share capital. So it is in lakhs. So 6,000 in lakhs, it means it will come 6 lakhs, 6,000 lakhs divided by the face value is 10 rupees. So you will get some 60,000 something. Okay. Into 3 by 2. Again you need to multiply with 10. So you will get 9 lakh of share capital. That is discharge of purchase consideration and total purchase consideration. Okay. Now first, that is step number 1. Step number 2, next close the books of accounts. So in realization account you need to take on the debit side all your assets, credit side all your liabilities except equity shares and preference shares. Okay. Next, you need to pass the due entry how much? 9,000 lakhs on the credit side by P Limited account, purchase consideration due 9,000, and you need to check whether it is credit side is more, debit side is less. So in this question credit side is more, debit side is less. The balance you need to consider as profit. Next, P Limited account, that is purchasing. So you need to transfer due entry realization account 9,000. All the accounts are in rupees in lakhs. Okay. Now on the credit side you need to mention in what way they are discharging. They are discharging in the form of equity shares 9,000. Next, equity share capital account. First you need to transfer your opening balance. So how much it is? That is 6,000 lakhs. Next we are getting profit, that is 3,000. So you can transfer here the full amount you need to transfer for equity shares in P Limited account, that is 9,000 lakhs. So you should get tally when there is no cash account. Okay. Next you need to pass opening entries, which is similar to your previous question. Okay, can pass. And the simple difference is in previous sessions problem we used to get loss, but in this question we are getting profit. So here general reserve account you need to mention as balancing figure. So in this question debit side is more, credit side is less. So we are taking general reserve account balancing figure, or we can call it as capital profit. Next, they're discharging 9,000 equity shares. They're passing for debentures. Okay, next. So as the amalgamation expenses is bearing by purchasing company, need to pass separate entry general reserve account data to bank account, that is 1 lakh. Okay, and they're setting bills payable account data to bills receivable account, that is 80 lakhs. So you need to prepare balance sheet. Okay, your general reserve 9,500 of P Limited, and you are getting 200 your general reserve account 200. Okay, so previous problem we used to deduct, but here we are getting, as we are getting profit, you need to add and you need to deduct 1, that is 1 lakh of amalgamation expenses. Apart from that, here profit and loss account you have two ways. Cost of debentures, it become fictitious asset. So I hope you learned in the internal reconstructions, when you are having fictitious assets you need to write off. So here either you can write off, if you are writing off you can deduct it from profit and loss account. If you are not writing off, you can take directly under current assets or separately here cost of issue of debentures. So if you are taking directly, no need of deducting, you can take you can just take 2,870 plus 825. If you are taking 50 here, don't take here. Okay, so remaining thing it will be same. Another difference is, as you are paying 1 lakh here in bank balance, you need to add both the companies and you need to deduct 1 lakh, that is amalgamation expenses. Thank you.